Time for another one today, and we're gonna go for a forex pair, odd GPY, the Aussie versus the yen, 10-year monthly candles, and let's see what we're up with that today. Right now, let me get some black space right here, and there seems to be here some resistance right here at the 88 level, 88.3, and you have some support right here getting tested right now at the 85.11. Some longer support here, and here you have some even further support. And here is the extreme range. All right. So that seems to be about it for our setups. Let's see this measured move for this pattern here. Small little arrow. So this is kind of nice. I have a 1, 2, 3, 4, 5, 6, 7, 8 month consolidation with tight range, and the implied measured move target would be this support right here. I like it. You're not going to get faded too much here. You'll be stopped right around where the support starts. And the fade action, or the noise, is these wicks. On the daily, on the weekly, a lot more action here for these wicks. But the monthly candle close decided to go above that. Hence, invalidate some of the power of the weight of all that price action going there. And let's see for the bullish scenario, in case we get there. Let me draw a little arrow. And that would bring us to the 891 level, which also coincides with some support, turn resistance from that breakdown here. There was a breakdown here eventually. Well, that happened, target reach, and now all this resistance, all this support, the 91 level now has become, all that support has become resistance. It's been, you see, it reached a price action a few months back, retested that line, and then decided to jot all the way down, and then morph to what we see here today. Those are my considerations when I put in targets. I start off with the implied measure move from the chart pattern, but then after that, I look back and I deeply consider these walls, which could slow me down to my implied measure move target. And that makes me revise the fact that did I choose a bigger target than I should have. Example, the next measure move would be this one here. And target would be just under here, the support, a little lower. So, well, I don't know yet how this is going to trace out, but let's say I would have a few bounces off, like these candles right off this line, the 82.50 line. And, well, let me just get precise for my measuring. Zoom in. Okay, I was a little generous with my arrows. All right, start here precisely, all the way down here, and I'll just move it. Add it to the breakdown line. There you go. I moved it for nothing. And I could slightly adjust that target to be, maybe raise it a little higher to avoid to be on the right side of that support right here. Nothing wrong with that. Lowers the risk to reward, but all these little greediness or pickiness to want to be exactly where the chart pattern is. I'm not saying to go above where the chart pattern implies. I'm saying put the chance on your side of reaching that possible target, increasing that probabilities by putting yourself on the shorter side. So you're not penalizing, you're not extrapolating or wishful thinking that the chart pattern is going to give you more a further target than it should, than it's implied. You're just getting out of the boat right before it starts reaching its target, and you want to make sure you get those profits, because after that we're not looking at the chart anymore. You want to put all chances on your sides, lock in your buy stops, your bracket orders, your profit stops, your sell stops, and after that you're moving on to vacation or playing tennis, whatever you like. Don't have to worry about it anymore. So make sure I want to increase my probabilities of reaching my possible targets every single time. Being on the right side of a round number, if it's a stock or equity, being on the right side of a wall of resistance or support, which could fade our move to our target. And if you have a choice, choose always the closer targets. They have a better chance of reaching that than a further away target. And you could just build off that and just wait for these monthly candles. You have a lot of time to morph and give you another launching pattern to reach your further and further targets. audjpy. Why does that ring a bell? Because I think a while back, let me go to my Badcharts site. There it is. A little while back, I did in September 4th, 2015, I did a little analysis for audjpy, and I had drawn these nice lines, and I had a target of 73.45. Let's go look at it now. Back to mid to late 2015. 73. What did I say? 73.45. There you go. And let's zoom back. Remove these candles. All right, I'll remove all my trend lines. Clean that up. There we go. Is that how I had it? There you go. I don't always redraw the lines the same way, but over time I believe that I'm drawing them better and better. I guess that's the expression, practice makes perfect. Here it is. Here's a target. There you go, 73.41. So what happened back here? We had a breakdown with this candle here. So stop on top here. And shorting here. That's your risk. And the reward is almost one risk, one reward. Not a super duper, I don't know, maybe a little bit more. I could have maybe played that. I don't know if I would have back then. Depends if I had other A++ setups available, and would I have been patient enough to wait? Honestly, did not know. My emotional IQ has gotten better over the years, So back in 2015, I could have been a little bit more trigger happy. I would have let my personal life maybe influence my trading. So got to be careful with that. Always think, are you being unbiased? And probably not. Always at some level we are a little biased. So price action goes down. Starting to reach short target. 1 month, 2 months. No. And, well, no, you didn't get triggered. But this could have been panic mode right here, which it shouldn't. That's why you have to honestly deactivate alerts. I had alerts before of equities or underlying instruments that I was in. If they move 1.5% or a certain amount, I'd get an email, and I'd go look at the chart, and I just stopped that. I said, whoa, Patrick, what are you doing? That is not going to help you. That's just playing with your mind. And I just stopped doing that. Even when my NAV moves a certain amount of percent, I used to have alerts on that. I removed all those alerts. Nothing's going to drag me back to the chart until one of my technical alerts for price level changes, or I get my my orders triggered, and then I say, okay, I'm stopped out for loss or profit stopped for win, and I just move on. That's the only alerts I have. If I don't look at that chart of a position I'm in for 6, 5, 9, 10 months, I do not care at all, or I shouldn't. You just forget it. And honestly, the most charts you forget, those are the ones that you reach your targets, that you didn't panic, you didn't get greedy, you didn't get fearful. And then you would have, when you look at the chart, you say, wow, if I would have looked at it, I would have probably panicked, right? 4 months. And then you say, man, I'm wasting my money with this trade. And that's how you do it. If you can't control your emotions, then just avoid them totally. Avoid the stimulus that is going to create those emotions for you and make you change your mind. This one's a hard one, right? Who would have stuck here? You would have cut my losses. But if you would have just been more patient, you would have reached your target. And always say to yourself, I'm losing 1% of my NAV if that trade fails. And I guess people who start panicking, they probably have more invested and they're not following money management protocols. That is what I had to say about that. And all right, did I draw it? So be careful for that, and keep those. Try to keep the emotional IQ good. And you're going to augment your chances of getting to your target. That's all it is. All right, audjpy, I believe. Hold on. audjpy. I'm probably going to get to that really soon. Not sure if those alerts. There we go. So I'm just going to come back when either of my alerts are triggered, and I'll see if I have a monthly close below those breakdown levels to see after that if the risk reward is worth the squeeze. Thank you very much, and see you next time. Ciao.